A signing bonus is a financial incentive used by companies to attract and retain talent. It's typically a one-time payment in cash, stock options, or both, designed to sweeten a job offer. It means extra money, but it's also a form of recognition that makes you feel good. When you start a new job, receiving a signing bonus can feel like a huge win, an immediate financial boost, and a warm welcome. However, many recipients don't realize that signing bonuses come with specific conditions and potential tax implications that may restrict your future options, especially if you decide to quit the job before the vesting period is up. That's because signing bonuses aren't just a gift from a company, they're more like an advance on future work. So if you leave a job too early, you may be required to repay that bonus either partially or in full. In this video, we'll explore the tax implications of receiving and potentially repaying a signing bonus. At first glance, it might seem straightforward. You get a check, and taxes are taken out as usual. But what happens if 6 months or a year down the road, you decide to take a new opportunity? Or if circumstances change and you find yourself needing to leave? We'll explore why the repayment of a signing bonus can often leave you with unexpected tax burdens. For instance, after repaying, you might not get back the same amount of taxes you initially received. In addition, if you've paid taxes on the bonus, but you subsequently repay the bonus, there are specific steps and forms you may need to complete to potentially recover the taxes you've already paid. Understanding these tax implications is crucial for anyone negotiating or accepting a signing bonus. So stay tuned as we break down the key tax rules and discuss possible repayment scenarios. But first, let's look at why companies offer signing bonuses. Organizations often use signing bonuses to secure top talent, particularly if they're competing with other firms. In fields with high demand, like engineering, healthcare, and accounting, signing bonuses are common. In the healthcare sector, for instance, hospitals may offer signing bonuses to recruit physicians, especially if the job is an underserved area. Employers offer signing bonuses for several reasons. First, a signing bonus is a way to appear more attractive to top talent in a competitive field. When several institutions are vying for a candidate, a signing bonus can tip the balance towards one. Second, it helps maintain internal salary equity. Employers may keep a candidate's base salary within the standard range, but use a signing bonus to meet the candidate's compensation expectations. Finally, signing bonuses can compensate for losses a new hire might face by leaving their previous role, like unvested bonuses or stock options. Offering signing bonuses is now an established practice in most industries. Beyond basic salary and benefits, it serves as a form of appreciation to the new hire for joining. While the specifics are often confidential, signing bonuses are often calculated as a percentage of first year's salary. For physicians in certain specialties, signing bonuses may even reach 15% or more. While signing bonuses sound fantastic, they come with a few tax implications. Many recipients don't realize a significant portion of that bonus may go to state and federal taxes. For instance, you may receive a $20,000 signing bonus. Well, if you're a single taxpayer in the 24% federal tax bracket, you'll be hit right away with taxes of about $4,800. That reduces your bonus to around 3/4 of what it was originally. Add state and municipal taxes, and you may end up taking home just $14,000. Things can get even gloomier if you quit your job before the vesting period. Many companies include payback clauses to the signing bonus agreement. This means that if you leave the company before a specified period, known as the vesting period, you may need to repay part of the bonus, perhaps even the entire amount. If this happens, there are specific tax rules to comply with. The amount of the bonus and when you have to repay it determines the process to recouping taxes. Let's examine 4 scenarios to see how those rules come into action. W-2 adjustments. If the repayment occurs within the same tax year, the employer typically issues an adjusted W-2 that reflects the net income after subtracting the repaid bonus. As a result, the bonus would not be counted in the taxpayer's income for that year. so taxpayers would not need to take any additional steps. Impact on tax liability. Since the taxpayer's adjusted W-2 removes the bonus from taxable income, the taxpayer avoids the initial marginal impact on the bonus. No further tax credit or deduction is involved. Claim of right doctrine, IRC Section 1341. For repayments under $3,000 made in a subsequent year, taxpayers cannot use the claim of right for a credit. Instead, the IRS allows for a deduction as a miscellaneous itemized deduction. The taxpayer must report the repayment as a miscellaneous itemized deduction on Schedule A. However, the Tax Cuts and Jobs Act suspended miscellaneous itemized deductions for the tax years 2018 through 2025. As a result, no deduction is available for this repayment until 2026. The effect on this is that there is no direct tax relief. W-2 adjustment. If the repayment happens within the same year, the employer should issue an adjusted W-2 reducing the taxpayer's taxable income by the repaid amount. Since the W-2 reflects the reduction, no additional tax actions are needed, as the repayment directly reduces the taxable income. For IRC Section 1341 stipulates the claim of right doctrine, which provides the taxpayer with two options for relief if the repayments exceed $3,000 in a subsequent year. These two options are the credit method and the deduction method. With the credit method, the taxpayer can claim a tax credit for the prior year's taxes by recalculating the tax owed as if the bonus had never been received, effectively lowering the tax paid in the previous year. Alternatively, the taxpayer can use the deduction method to claim a deduction for the repayment amount, which will reduce taxable income in the year of repayment. When choosing between the credit and the deduction, the taxpayer should calculate both options to determine which offers the greater tax relief. Generally, the credit method yields a larger tax benefit because credits directly reduce the tax payable, whereas deductions reduce taxable income. To claim relief under IRC Section 1341 using the credit method, enter the credit amount on line 13B of Schedule 3 of Form 1040 and write IRC 1341 next to it. To use the deduction method, enter the credit amount on Schedule A, line 16 of Form 1040. In both cases, it's advisable to attach a statement explaining Section 1341 claim, including calculations and details of the original income and subsequent repayment to substantiate the claim with the IRS. For healthcare professionals, signing bonuses are often generous, but if you're not certain you'll stay for the vesting period, it's crucial to consider these tax implications. A $20,000 signing bonus might feel like a great upfront benefit, but it's not worth it if you have to repay it all if you decide to move on. So, should you accept a signing bonus? Here's what to consider. You need to assess your commitment. Are you likely to stay with the company beyond the vesting period? You also have to understand the tax impact. Signing bonuses are taxed at your marginal tax rate, which might eat into the total. You also have to review the payback terms carefully. Understand exactly what you're agreeing to, especially if there's a chance you'll have to repay it. If you're concerned or need help navigating your options, consult a tax professional. The impact of a signing bonus isn't just about the number on the check. It's about how it fits into your career plans and how much you're willing to risk should you decide to move on. If you found this video helpful, please give it a thumbs up and subscribe to the channel to receive updates on our latest videos. Want to know more about the tax implications of signing bonuses? We'll be happy to fill in the details. Thanks for watching.